It doesn't look like there's a G20 coming up anytime soon, and it doesn't look like there's a lot of sort of multilateral deals and talking amongst allies happening either.
No, you're right, Sarah. I mean, first of all, if we step back from the currency manipulation issue, and by the way, there have only been three instances in which the U.S. has leveled this charge, and I initiated two of those back in 1988, one against Korea and one against Taiwan. We studied the issues very carefully. The third was against China, I think, in the early 1990s. And I know there's a lot of dispute as to whether or not this decision by the president was legitimate. I think it reflects a growing sense of frustration. But I also think that we're in a world where currency issues and trade problems need to be kept somewhat apart, because I think when they get too tangled, they generate new levels of market anxiety, and that undermines global investment and that undermines global growth. I don't think that's in anyone's interest. As Steve and others have pointed out on your show in the last day or two, we're in a world where interest rates are sharply changing in front of our very eyes. Tons, billions now of funds are invested in negative interest rate structures in Europe. And Japan is following a very complicated path of quantitative easing. I think we need to have a serious dialogue involving the U.S., Europe, Japan, and China on these issues of currency stability and try to pull it a bit away from the heat of the trade talks, because if not, then I'm afraid we are going to risk ending up in a more virulent currency war than we see already today.
Charles, this is Morgan. We seem to be in very uncharted territory right now. And you just mentioned those negative interest rates, the fact that you're in Germany right now where those rates continue to slip further and further into negative territory. And we had Art Cashin on here in the past hour who's noting never in the history of the world have we ever seen negative interest rates until, relatively recently. How does that play out, and how do countries and the world more broadly shift away from that?
Well, I think central banks have to really step back and ask themselves, and I would put the ECB and the Bank of Japan at the front of this, but I also think the Fed has to ask themselves, can they really solve all of the economic problems of the world through interest rate reductions? I am quite skeptical about that. I see the ECB leaning into another phase of quantitative easing as the leadership changes, and I question the legitimacy and the effectiveness of that. To be honest with you, I think these negative interest rate structures, which are now spreading around Europe, have a very perverse risk on savings, but I also think they distort financial markets considerably, as has the whole process of quantitative easing. Quantitative easing was essential at a certain point to get the global economy going again. But it is not a substitute for fundamental structural change or fiscal discipline. And we need to return to a broader discussion of what are the ingredients of sensible, balanced macro policy. The Plaza Accord in 1985 was not just about decreasing the value of the dollar. I helped negotiate that with Secretary Baker and David Mulford. It was also about stimulating the German and Japanese economies to rebalance the global economy. I think we need to have a serious discussion about what will underpin global economic stability and growth as we move closer and closer, potentially, to the end of this long run of an expanding market.
Charles, want to go back and talk about the U.S. and China specifically. It seems like we want a good deal, but it's not exactly clear what's good. So what do you think is the minimum necessary concession that the U.S. should try to get from China just to get at least the beginnings of a deal done?
It's hard to know. What I think might make sense at this stage, given how many issues are at play between the U.S. and China, is both sides, I think, have too many different issues swirling in the bucket of these negotiations. I would try to phase these negotiations so that we don't try to solve every problem at once. In 1989, we launched talks with Japan strictly about structural issues. We put aside particulars about automobiles. We put aside particulars about trade. And we actually made some progress by focusing on deep-seated structural issues in both economies. I think it might make a lot of sense if the U.S. and China were to say, okay, in the first phase of this, we're going to concentrate on some basic objectives and some initial steps on both sides. Purchases by China, broad understandings regarding exchange rates, but also some initial and reaffirm commitments on intellectual property. In the second phase, there's going to have to be a serious and extended debate about issues relating to technology transfer, global security, and issues of data privacy. You know, a year ago, around this time, the U.S. tightened its foreign investment laws to intensify the monitoring of those last two issues, security issues and piracy. I think if the U.S. were to extend consultations with Canada, Europe, Australia, New Zealand, Japan on those sets of issues, and then try to have a more multilateral debate on those issues as a second phase, it could actually be a basis for progress. Finally, I think China will have to engage in a discussion on the deeper issues relating to the connections between government and private business in China today. Both the large private companies and the state enterprises are receiving the kind of support that does raise questions, I think, in global markets everywhere. I think by phasing these talks, both sides might have a better chance not only of stabilizing markets and avoiding further undermining investment in the global economy, but also I think they may have a better chance of actually making meaningful progress step by step in each one of these sets of issues.